Late night, ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, and welcome back. So today I want to talk about compounding returns to build positions. Whether you're compounding those returns and building your cash position, or you're looking to compound those returns and build a specific position in a certain asset or asset class, I'm just going to show you over here on our chart pretty much just a powerful example of how you can play trends. So what we saw, essentially we had in the Bitcoin miners, this is WGMI, the Bitcoin miner ETF. So we saw this major downtrend here coming from the prior bull market. So we're not interested in buying into this downtrend. You guys know my thoughts. We want to wait for that breakout, that trend reversal to the upside, getting in on the confirmed reversal rather than taking that risk of buying in through this falling knife. You know, even if you got into this move right here, ultimately just bleeding lower. So we want to make sure that the trend is on our side. So what we saw, you know, price coming down here, stuck under this resistance line. It eventually just broke through down here. So that's what I've marked, this low right through here. We can also see, if we zoom in really close here, we do see that our low time frame moving averages, so we kind of see the pink line and the blue line here, that's our 8 and 21 day moving averages. We see those coming down, they curl back up. That's the first sign of the low time frame momentum change. So we're starting to see on the low time frame, things are looking a little bit better. You know, stuff's starting to really put in that more of a bottom type price action. So yeah, on the lower time frame, looking for those higher highs and higher lows. You can see here on the weekly though, we obviously have not confirmed it. It takes a while for the weekly higher low to confirm. That's okay. We're patient. We're here to ride the trend and take advantage of opportunities, not get caught on the wrong side. So I would rather wait for the higher low entering down here than I would buying over here. That's just no brainer to me. Buy in strong levels of support in the uptrend and just sit patiently in the downtrend, wait for that reversal. So we saw price come down, put in that bottom. We saw our low time frame moving averages curl up. It's got that little bit of a relief rally breaking out of the downsloping trend line. And then we see we went on our first extension here for the miners. That was a 160% move from this low to this high. It was pretty lucky if you did catch this move perfectly. As I said, we don't time tops and bottoms perfectly. You know, if you did get into the miners here, that was a nice little move. But what I want to focus on is all of the subsequent price action. So I'm going to show that right here and just really show you how we can compound these returns and build these positions substantially larger than what they originally were. So let's say we come down here, you know, we go into our first rally. We've now taken out the lower high and lower low theory. So we've put in that higher highs on the weekly time frame. We came back, we retested the lows, we held the lows on the weekly. We got a 618 retracement on this initial rally. So that's those Fibonacci levels. You always hear me talk about that golden zone between the 618 and the 786. This is a really good example. I'll show you it as time goes on, how we kind of just keep coming back to that golden zone. It turns out humans are very predictable and we are the traders making up this market. So all the price action that we see on the chart is essentially just market participation being visualized. So we can see here we had a nice breakout. We're starting to get a little bit of relief of our low time frame moving averages. They broke above our 50 days, so a nice little early signal there for that trend reversal. And then we saw price come up, retest the 200 day, get rejected. So if we see something similar playing out over here, look for price to come up into that 200 day. Potentially we see that confluence with this upsloping trend line, so a lot of resistance here. This would be the most likely price action in my opinion. What I want to point out too is right now we are in a downtrend. So you see we were in this uptrend from about 2023 into 2025. We broke down below here. So to me, this is more of a sustained downtrend. We need to break out, get back above, hold those higher lows for potential continuation and potentially start a new trend. So right now I'm sitting on my hands patiently. I want to wait for that breakout. We want to see those moving averages break above that 50 50-day. We want to see the 50-day start flattening out and curling back up to support a move upwards. If the 50-day and the 200-day continue aggressively pushing downwards, that's a kind of a signal that the low time frame momentum is not strong enough to really kind of want to reverse yet. You can see down here we still had that 50-day angled pretty aggressively down, so it wasn't until right over here just after that low was printed where we started to flatten out. So we want to look for signs of the 50-day flattening out. For now, we are still stuck under that with our lower time frame moving averages. So watch for the 8-day and the 21-day to break out above the 50-day. Watch for price action to break out above this downsloping trend line, and watch for that higher low and entry there potentially. We will have to look at our momentum indicators when that time comes, but back to kind of the theory here. Entering, to see the initial, or sorry, not entering here, we see the trend reversal, the potential trend reversal. We come back, we retest these lows. We can now take a risk here. So what we do, we enter our position within that Fibonacci golden zone, and we put a stop loss below that prior structural support. So for this move right here, structural support is just below these lows. If price comes back down and breaks below those lows, the most likely price action is continued downside. So we've kind of come up, you get that entry rate in through here, and look at this move to the next high, 208%. I always say if you get a quick 100 to 200% move, definitely take your initial investment off the table, book some profits, protect that position. Don't round trip a 100 to 200% move. You're going to feel really bad at the end of the day. So that's what I talk about trailing stop losses. Either, we go up 100%, take the initial investment off the table, let the house money ride. So we talk about that risk-free trade, and then continue trailing your stop loss up. So as price, we get to our peaks, and we do start to break down, that stop loss that you're continuously trailing up is protecting that position. Otherwise, you could even just hold the position and look to reinvest the profits. So if we just take, let's say you buy in on this Fibonacci golden zone here, and you ride it up, it goes up 100%, you take half off the table, it goes up another 100%. Let's say you want to take another half off the table, or even just a little bit more profits or a stop loss. You've essentially tripled the size of your position for the same amount of cost. And then now that you've taken those profits off the table, you're looking to strategically reinvest them. So rather than buying right back into this downtrend, you know what we're going to do? We're going to pull our Fibonacci, same thing we did over here, look for that golden zone entry, put that stop loss below structural support, and ride the next trend up. And look what we see here, another 160% move. And we do the same thing. So essentially just rinse and repeating. But the key is we are in a macro uptrend. So this isn't going to work in the macro downtrend. That's why we use stop losses below structural support to protect those trends. And ultimately just riding that upside momentum. We go up 100%, take half off the table, let the rest ride, either continue trailing those stop losses up, and then look to reinvest again within that Fibonacci golden zone. And then we get a 95% move. So that's when I talk about the margin of error in terms of your targets. If your target is to take profits at 100% profit, and you go to 95, don't be afraid to take a little bit off the table. We're not here to miss out on dollars because we're pinching pennies. 95% is close enough to 100% for me to take profits. So really, don't really get so fixated on specific entries and exits. Find a rough area that you want to buy and a rough profit-taking target. Follow your strategy, execute it, and then do the same thing over and over. And what we see again, coming back to that Fibonacci golden zone, holding our macro uptrend, entering there, another 100% move, taking half off the table, waiting for that Fibonacci golden zone, and then re-entering, another 117% move, coming back, so trailing that stop loss up. This is where the trend really shifted, and this is why I recommend using trailing stop losses. So let's say you were in this move here, you caught the Fibonacci zone, you went up 100%, you took half off the table. You've booked that initial investment, and then we start to break down, but now your initial position is, or sorry, yeah, the house money position is now technically in the red because you've entered kind of just below this area over here. So that's what I say. If you use a trailing stop loss, that's a stop loss that continuously moves up with the price. So if we used one of those, we would come up, our stop loss would protect those profits up here. You know, you might not end up with that full 117% returns, but let's say you cut half at 100% and you sell the other half at about a 60% gain. You're looking at 80% returns, and 80% in terms of the max return here for this move is really good. So don't really kick yourself for taking profits. Nobody ever went broke taking profits. But look, if we were able to trade this, or if you were able to trade this, and this is essentially what I've been doing this whole cycle. I've been sitting on my hands because obviously I wanted to see if this trend line would hold. So now I'm looking at this as the downtrend and waiting for that new trend to form so I can essentially do the same thing, cycling in and out of the strongest miners at cheap valuations, taking profits on those major extensions and looking to reinvest the profits strategically at those lower targets, which is those Fibonacci golden zones. And what we can do, essentially, even if you just targeted 100% returns, you would have essentially 5 to 6 times your portfolio, whether it's cash or whether it's the actual position itself. You go up 100%, take half off the table, it comes back down, you buy back in, it goes up 100%. So you're just doubling your money almost every single time. You're really able to build large size positions by taking advantage of the profits to the upside and then being patient and waiting for those entries to the downside. So that's what I say when I talk about trading the trend. You really want to make sure the macro trend is in your favor. Right now it is not. We want to see that breakout, that higher low, similar to what we saw kind of over here. And then if we do take a look at all of our momentum indicators, I'll show you it does look like a very similar setup. So we saw the orange DMI negative line here on top of the red ADX line. It has broken beneath and under and kind of, sorry, yeah, broken beneath the red ADX line. MACD is pretty oversold. RSI, pretty similar level to what we saw over here. So we kind of also recognize, you know, RSI, similar setup. DMI, the vortex indicator, the bearish narrative is favored here. We see it with that negative line on top of the positive line. And similar to over here, you know, we do kind of have that major downtrending price action on the short-term bubble risk indicator. So we kind of recognize, I think we're in something like this over here. We need to break out of our downtrend, put in that higher low, and establish a new macro trend on the weekly. I'm going to be here waiting for those entries and then getting involved, riding the strongest miners to the upside, and look to kind of employ a similar strategy to what we have over here. Take advantage of the rips and buy the dips. It's just important that we're patient and we execute on our strategy. Never kick yourself for missing out on profits. So if I took all my money off the table here at 100% and I saw it run up another 100%, it's going to hurt a little bit emotionally. At the same time, you made 100% returns on a trade. That's better than you losing your money or your money not doing anything. So never kick yourself for taking profits. If you did take profits, you did it for a reason, and everything we do, we need to do for a reason. We don't do it based on emotion. So we make our plan, we have our strategy, we wait patiently for our entries and our exits, and we execute those when the time comes. So thank you so much for watching, guys. I hope you learned something new, and I'll see you in the next one.